Hey guys, welcome back and thanks for tuning in for another fantastic video this week. This week's a little bit of a grim one, but it's one we really need to consider now. So this is going to be about the currency collapse of the US dollar and as a world reserve currency. As you might have heard, the BRICS currency is looking to take the place of the US dollar for various countries around the world for a reserve currency, which means it's used for trade, etc. And this is very important for you as an investor to consider when you're making future investment choices. So today we're going to run through exactly what's going on, what we hear in the news, what exactly is happening behind the scenes, why the US dollar is at risk, and most importantly, what kind of investments can protect against this kind of risk. So I hope you enjoy this one. It's a really good one this week, and I'll see you all next time. Let's talk about something scary, and that is the collapse of the US dollar. Hey guys, hope you're doing well. Today we're talking about the collapse of the US dollar, and to kick it all off here, we're going to talk about exactly why this is going to happen. Currency collapse is a phenomenon that occurs when a currency rapidly loses its value, or in other words, depreciates. This leads to inflation and economic instability. The United States dollar, or USD, is currently known as the world's reserve currency. What this means is that it's used the most commonly for international trade and various transactions as the currency which has an economic value that's trusted by countries all over the globe. As it stands, the USD is the most widely used currency in the entire world, and every kind of trade involves its use. Now, the possibility of its collapse becomes real, and if it occurs, the global financial markets are in trouble for exactly this reason. Several countries, including Brazil, Russia, India, China, and Saudi Arabia, are reportedly aiming to phase out the US dollar as the world reserve currency and replace it with what's called the BRICS currency, which, as it looks like, is an acronym for those countries I mentioned above. So if you're concerned about the possible collapse of the US dollar and want to protect your wealth, there are several ways to do this. But before we dive into these options, let's first understand why a collapse is looming and how exactly it will happen. So let's start with why currency collapses occur in the first place. The value of fiat currencies, which, if you're not familiar with the term, is a currency that contains no intrinsic value, is no longer based on gold, but rather on the strength of the underlying economy. Therefore, when the stability and security of a country is called into question, so will its currency. Therefore, the main causes of currency collapse in the past have included things like hyperinflation, high levels of debt, and the most common being political instability. US debt just recently passed $32 trillion. This outpaced GDP by almost double and shows no signs of slowing down anytime soon. There's also a US debt clock that you can search up on Google, and it'll show you the live number, which is staggering. This is one of the most concerning factors in terms of its currency collapsing. And to add to the debt levels domestically, the pandemic further initiated inflation and subsequent Fed interest rate hikes, which increased debt service or interest payments on the government debt, which further snowball into faster growing pool of overall debt. And this, of course, points to that second point, which is high levels of debt for currency collapse. A currency collapse would look similar to the outcome from a world war, from what we've seen in the past, with high levels of poverty and further systemic risks internationally. The US dollar, as we've mentioned, is the current world reserve currency, since it's viewed as the most stable currency and reliable for use in international trade. But here we start to see some problems, especially with what we've been hearing recently. Interestingly, 11 foreign countries are currently adopting the US dollar as their native currency and use it for day-to-day transactions. And this continues to be used despite the enormous $1.2 trillion trade deficit that the US has worldwide. Another important catalyst for the removal of the US dollar as a reserve currency is its weaponization during the Russia-Ukraine war earlier this year, and the Western sanctions and subsequent halting of the SWIFT payment system from the West. Many countries started to observe the damage the United States could do with this level of strength and authority through the use of the US dollar. Next, let's take a look at the BRICS currency. As we've mentioned, Brazil, Russia, India, China, and Saudi Arabia, forming the BRICS countries, are looking to phase out the US dollar for a new world reserve currency called the BRICS currency. The BRICS coalition is looking to meet in August 2023 in order to discuss the possible implementation of this new reserve currency. Additional to this, Saudi Arabia has also shown interest in offering the sale of oil in currencies other than the US dollar. Alongside the new BRICS currency, this will significantly reduce the need and demand for US dollar reserves abroad and will cause it to be sent back to American shores since it no longer will be needed. This, in turn, would weaken the US dollar as the world reserve currency and may lead to a collapse through the following steps. So the US dollar would no longer be needed by foreign countries, which would lead to it all coming back to US shores. And of course, as we know, more currency leads to inflation, and inflation leads to the Fed raising interest rates. These higher rates then also lead to increased government debt service or interest payments, and this also leads to a decrease in asset prices and rapid dollar depreciation. Now it becomes obvious that this vicious cycle will continue as the US dollar loses stability in the above scenario, and depending on the amount of US dollars returned to US shores, which could be significant, inflation might be large here. So let's take a look at some alternative investments, given how scary this is. So in general, assets provide the long-term stability that fiat currency does not offer, and are, therefore, superior in most cases to holding fiat currency itself over longer periods of time. Investors can seek refuge from potential currency collapse through the use of our favorite word, diversification, across various assets. Some of the most foolproof in avoiding currency collapse of the US dollar are as follows below. The first of these investments is to look at international equity or bond funds. In order to be insulated from a domestic currency collapse, investors can look to purchase international funds for both bonds or equities, and a good ticker for this for the equity side is VXUS, which strategically does not include the United States in its equity distributions. The second is looking at international real estate investment trusts or different sector funds. Doing so allows for exposure to foreign real estate and, of course, protection from domestic real estate and various sectors that are mostly shielded from the US economy. It's important, however, to keep in mind that in the globalized world in which we live, it's virtually impossible to not be at all impacted by the collapse, such that of the US dollar. The third one we want to look at here is physical gold, which is probably the most popular. As is usually the case with precious metals and commodities, gold provides one of the best methods for wealth storage over time, and it has stood the test of time as well. Its supply is limited, which means it will always hold value, and demand is strong since it's being held by banks in reserve and is used as an input for production by businesses and corporations to build products. It therefore provides a great alternative to store wealth. The fourth is Bitcoin, and although controversial, it is noted to be the digital equivalent of gold. It is strictly digital, as its name suggests. It's algorithmically limited in supply, which can't be tampered with, and it is not controlled by one single individual or group, but by everybody who uses it, which adds to its security. Altogether, this makes for a very secure and, of course, efficient alternative investment. The fifth and final one is looking at US companies that also operate internationally. These companies do business internationally and generate revenues in various currencies. When they do this, and the dollar is depreciating, this can then allow them to convert those foreign currencies to a less valuable dollar, meaning they can convert it to more dollars and therefore make a higher profit on paper. And this might be enticing for dividend-paying stocks in this respect. So in conclusion here, while it is possible that a significant USD depreciation or even a collapse event might occur over time and in the near future, diversification into alternative international assets, and that's the key, international assets, can provide protection from currency risk and, in this case, country risk as well.